Good morning, everybody. It's Christian from Serene Education with the 4 major notes update for the 1st of November 2012. Morning, guys. Hope you had a fantastic day yesterday. Not only in the markets, but also Halloween. Unfortunately, the weather last night wasn't like great at here, but we still had trick-or-treaters here in Wales, and we had a great time. Okay, let's have a look at the charts. What are the charts telling us? Very interesting yesterday, as we have seen this exhaustion candle. Price moving higher yesterday morning. However, coming unstuck yet again at the 1300, the psychological area here, 1300. And since then, through the latter part of yesterday's trading range into the US, going into the close, we saw price pulling all the way back until we got this doji typical exhaustion candle at a psychological support and resistance level. A nice round number at 1300, and that was depicted beautifully on our smaller time frames. And if I can just show you the 4 hour in particular, notice loss yesterday in particular, 9 a.m. 4 hour trading into the US session open, and then coming unstuck at the just before the start of the US session yesterday. A nice evening star formation, up, indecisive, and negative in the opposite direction at a major support and resistance level, or psychological support and resistance level here in the shape of 1300. Since then, plateauing last night at the close of the US session, and then this morning, from what time are we looking at? 5 a.m. this on, we've started to see price really fall into the downside. So now, effectively, if this continues, you can see the CTC on either side is remaining negative, even though we had this upside move yesterday, still confirming that sentiment was negative. We want to see now price closing negative, and that will constitute that we should be looking for the further or downside to remain, and we should be targeting the prior support areas roughly around here. 1288 would be a great start. Onto sterling. Let's have a look at the daily. Yes, another bullish engulfing candle, still moving high, and most important, you can see where price is testing now. I said we wanted to see price trading above this area here, if possible the price swing. You can see this evening star formation here, which formed this lower swing, which is lower than this one, lower than that, which depicts now that net sentiment is negative. You can see in near term now, we've seen an upside movement from these lows over here, so swing high, and this candle yesterday, the daily candle breaking and closing higher than the prior consolidative range that we've seen over the past couple of days, 25th, 26th, and the 29th. Okay, so the end of last week, going into this new week, we've seen price now consolidating, and then we've seen yesterday's candle moving and closing higher. So now we want to see price now taking that and pushing to the upside. We could look potentially near term. Ideally, it would be far better to get above the 1500, but otherwise, what we want to see now is the CTC on our side remaining blue, so the positive is still there. You can see that all the moving averages are below price in order, the 2050 and the institution. So now what we should be doing is taking the upside. We want to see that momentum now moving higher, and in doing so, we should see price now gaining a bit of momentum to the upside, and you can quite clearly see the 1600 below us. Okay, most important thing, the institution moving average on our 4 hour now is below price, so now it needs to remain above that now. Going forward, price, if it does pull back, cannot and should not, must not, put it that way, close and trade lower than the 1611 now on our 4 hour chart. So if any pullbacks occur, then yes, great, as long as they maintain above here. And then what we want to see now is price taking the momentum higher and pushing it to the upside. You can quite clearly see the intermediate trend has been broken on our intraday time frames, which is fantastic. It's another sign that the sentiment is looking positive. Now we want to take it further. We want to see nothing but bullish engulfing candles now on our intraday chart to catch some momentum to the upside. You can see quite clearly now at the start of this morning, you can see that price is hesitating now at this current level here, which happens to be price support and resistance level. So we want to see a bullish engulfing candle, okay, to confirm that sentiment is still looking positive. And near term, we could look at potentially the 1800 as our first target on our intraday. You can see higher swings depicting upside movement here on the price, which is great. Swing high, swing high, swing high. All the moving averages below price, fantastic. However, we're seeing a lot of red arrows telling us we should be seeing consolidation, and sure enough, we are seeing that. So if you want to see potential trade first thing this morning, look at the low that we had currently to the high that you can see here quite clearly. There's resistance high above price. As long as price stays above, as I mentioned, 23.6, then we should see price reattempting these highs. Ideally, what we want to do is see a bullish engulfing candle to the upside. The other scenario would be a bearish engulfing candle near term, and then intraday we should be looking potentially all the way back down towards our institution moving average down here at the 1606 mark. Onto the US dollar Swiss franc. Let's have a look at the daily here. Clearly moving within the consolidated range recently since early September. Noticeably, the major one we need to talk about is this resistance level above us at the shape of the 940, which also in the shape of the institution moving average. Histograms remaining negative either side. We have had a red arrow cadence. We should be seeing consolidation. Sure enough, we've seen buying into the top end of this consolidated range. And near term, we've had a bearish engulfing. Prices reverted down yesterday. However, we've had a more of a buying sentiment at the end of close yesterday on the US session and through the Asian session going into the European session this morning. We've seen price moving slightly to the upside. Okay, so if we do end up seeing a bullish engulfing out, then we should see price reverting or reattempting the 940 soon. Remember, we're going into the first week of a new it's a new week, first week of a new month, which is constitutes that we should be seeing non-farm payroll, and from now on we're seeing a lot of news, especially today and tomorrow. We have the unemployment claims on the US session, ADP non-farm unemployment or employment change this afternoon for the US market. So let's see if that factors in. So we're getting great employment figures for the US. We could see the US dollar rallying against the Swiss franc near term. So this momentum yesterday, if it's true momentum and it's starting to see a bit of sentiment pushing through to the upside, we could see price rallying into the end of trade tomorrow into this major support and resistance level. The only thing that's going to cancel this candle out over here near term is a bearish engulfing candle. Let's have a look at the 4-hour chart. You can quite clearly see I've put here my major support and resistance level here at 940 and the major support and resistance level below me at the 920. You can see price just been consolidating between these 2 points over the last couple of months. The nice little breakout near term, a lot of indecision candles followed by a nice bearish engulfing candle. Break below the 23.6, which happens to be the last, and we should see price rallying towards 38.2. Break below that, back into 50, 61, and failure to break below the 61 has now seen price moving back to the upside, targeting the 50, the 38, 23 near term. This past 4 hours, you've seen price heading into that 23.6 February retracement area. It needs to stay above that. If we can get above that, then above the 23 going into the start of the US session, then we should be looking for price to head up towards that magical 940 mark, which happens to be our major support and resistance level. So you can see in near term a bit of red. You can see the red candles. However, the histogram on the other side is showing blue. Going candles now going blue. This candle, this 4-hour candle, would have to close though in order for this candle to remain blue. You can see quite clearly it's moving between 2 points. The longer it stays below the institution, the more likely it's going to be red. It quickly gets above the institution, then it's going to remain blue. So indecisive. Ideally, close and break above 23.6, and a close above there would be far more beneficial than seeing price moving sideways. You can see at this moment now on a 4-hour, all the moving averages are tied together, going flat, which tells you that there's market sentiment, and if there's no market sentiment, price is just going to consolidate. So just be aware of that, guys. Last pair of the day, the US dollar Japanese yen. Let's have a look at the daily price thing. Fidgeting with the 80 mark here, which happened to be the major support and resistance level over the past couple of months. One or two areas that we saw breakout, but true momentum wasn't generally behind these moves. We had 2 parts to our strategy, which requires 4 parts, and this is the beauty of the CTC. Quite clearly, you can see here back in June, a fake out, and remaining, you can see the CTC, the histogram, or the sentiment indicator above price was telling us this was not genuinely buying sentiment near term, and sure enough, price reverts to the downside. Here, on the other hand, totally different. We're seeing break higher. However, the sentiment has remained blue, and sure enough, this pullback yesterday, the past couple of weeks, has pulled back into the institution moving average. Price over the past 3 days has found support here, indecisive nonetheless, but above a major support and resistance level in the shape of the institution. And price, as I mentioned, as long as it stays above here, would attempt back towards the 80. And sure enough, over the last night in particular, you can see price rallying into that 80. However, still remaining below that all-important area. So on our 4-hour chart, you can quite clearly see that area above price here. So it's imperative that this remains. If it's to be bearish, then the 80 needs to cap price moving higher. However, you can see the sentiment near term on our 4 as well, all looking blue. So there's a lot of positiveness in here. Hence the reason why price has been making higher highs recently. Coming unstuck recently, but you can see still wanting to make or attempt those highs at 80. So what we want to see near term is a nice break and close and a nice bullish kick off the the positive side of 80 to see price moving higher in the coming week ahead. Just remember that US dollar, Japanese yen will follow the non-farm payroll figures tomorrow quite closely, so it's quite interesting to see what happens. But as you can quite clearly see now, there is no trade at the moment because we're trading into a major support and resistance level. We want to be on either side of that, either bullish engulfing or bearish engulfing candle on the 4-hour would definitely clearly give us an indication what's going to happen for the remainder of today. The hourly chart, you can quite clearly see that still remaining above the all-important institutional moving average, and as long as it maintains that, then the sentiment will still remain positive. Okay, you're seeing there's a lot more blue near term than red. Okay, you can see that price needs to now maintain those levels above the 80 in order for this to remain positive. Okay, so we're trending below here. You can quickly see in the hourly chart back below the 80 again. We'll go backwards and forwards. However, we want to see a nice bullish engulfing candle above 80 to constitute that we should be looking for further highs intraday, or a bearish engulfing candle near term to constitute that we should be looking for near term support and resistance levels as our first targets intraday. That's it for today, guys. Hope you have a fantastic trading day. Please follow the rules of this particular template. If you're interested in trading or getting into trading, and you like what you see on the chart, or you like what we're doing, please have a look at www.forexmadeeasy.com to see further information on our introductory package into Forex trading. Other than that, you can always contact us on info@sereneeducation.com for further information on any other courses. And other than that, keep it simple, guys. Be aware there's a lot of news out today and tomorrow. Very, very important. Nikki and I don't trade non-farm payroll. It's a long weekend, so I will be on tomorrow morning, however, to do the analysis, but we won't be trading because of the fact it's non-farm payroll. If you are looking to trade non-farm payroll, please do at your own risk. There's a lot of volatility that happens because of that, and it can be quite hectic. So please leave it up to the guys who know what they're doing. Other than that, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.